Good afternoon, guys. It's Workin, bringing you a quick update on Bitcoin. Hope you guys are having a wonderful afternoon. I'm going to try to make this video very, very quick, guys. Not much has changed. We are still, but I did want to make a video. I know I had a lot of you guys sending me direct messages on Twitter and Facebook, so I wanted to go ahead and answer you real quick by putting out a quick, to be redundant, video. We are looking at Bitcoin to the US dollar one-day chart on Coinbase, and last time we spoke, Bitcoin was operating. In fact, let me switch over here to the 4-hour because it'll be a little bit easier to see. Last time we spoke, Bitcoin was operating right here. It had just come back up, tested about, or actually I believe it was sitting right on top of our $10,650 support, guys. I did tell you that it looks like the bears were starting to take control. In fact, that's what I labeled my prior video. Price, even though it did look like we may want to come back up and test this prior high, that didn't happen, and we came back up to about 10,800, and then of course the bears did take over. Whoop, I'll get rid of that. Bears did take over, and price did just collapse. And of course it came back down to our known area of support right around 9,950, 9,950, and it has been consolidating in between that area of support that I've had marked out between 10,150 and 9,950. We're basically just ping-ponging back and forth between those two zones. Now, as of right now, guys, it does, if I switch out here to the daily, it does look like Bitcoin is trying to put in another low, and to be fair, it would be a higher low. So overall, right now, this massive consolidation pattern, if I just switch over and kind of get rid of some of the noise here, let me pull up Bitstamp here, we can see that we are still in a massive area, symmetrical wedge here, which does have an equal opportunity break to the up or to the downside, guys. And a measured move break off of this, if it were to break down, a measured move would have us somewhere down in the lower to right around 68 to 7,200, somewhere in this area right here. And we can just see visually, not only is that a measured move off this, but we can see visually that that would be a very, very obvious area of support. That was the area of support off this last area of consolidation, right? So that's the area that you would expect to drop down to. But as I said last time, guys, if this thing does end up breaking down, I'm not convinced it wouldn't be a bear trap. Remember, a lot of people are looking at this as a potential descending triangle, and you can certainly make that case. In fact, if I get rid of this, and I just, let me grab this, and I just look at this as right here. We're certainly creating a series of lower highs, but if I look at the area of support, we can see that Bitcoin, and if I just draw this just a little bit higher, we can see that Bitcoin has basically, this area was resistance, and then resistance flipped to support right here on July the 2nd. Bounced off it, came back down here again on July the 16th, 17th, and 18th, bounced off it here, bounced off it again, basically from July the 24th all the way through July the 31st, again, bouncing off this exact same area, and then again bounced off it again on August the 15th, and didn't quite make it down here on this last low here today on August the 22nd, but if this thing does come back down and does find some support once again down around 94, 9,500, this area down here, if it does come back down there again, technically at that point we will no longer have been making higher lows, and I can no longer call this a symmetrical triangle or symmetrical wedge. I'd have to call it a descending triangle, and a descending triangle would break to the downside. Or excuse me, that's not true. It doesn't always break to the downside. Statistically, it breaks to the downside. Probability is a break to the downside. It can break to the upside. There's no question it can break to the upside, but probability would be a break to the downside there. But again, we're nowhere near, or I don't want to say we're nowhere near there, but we are not there yet. As of right now, we can still classify this as a symmetrical wedge, which with an equal opportunity break to the up or to the downside. But I'm pointing that out that I do have a slight bias to the downside. But if it does break down, I don't know that it's going to make it all the way down to that measured move of the lower 7,000s. I do think there's a good chance that that $8,500 area that we've been discussing forever, which would be right around in this area between about 85 and 8,900, right around here, I do think this could act as a decent area for a potential, for obviously support, but a potential area for price to break down and then create a massive bear trap where everybody and their brother goes short. Everybody continues to think that we're going to be targeting at least the lower 7,000s, if not lower than that. So everyone's going short, and we actually reverse course right around that $8,500 area, 89 to 8,500, which of course would coincide nicely with that CME gap, as well as numerous other factors at 8,500 that I've talked about ad nauseum in the past that I'm not going to go over again. But 8,500 is a very, very relevant zone. And I do expect, even if it does end up breaking down and going much lower, I would expect a bounce somewhere between 89 and 8,500. Now, whether or not that is a complete reversal and we go to the upside from there, I don't know. But if it does break down, I will at the very least expect a bounce at 85 to 8,900. And depending on how it acts there, that's I've got buy orders sitting down there, as you guys know. Whether or not I hold on to those buy orders will depend on how price reacts at that area. We'll have to wait and see. But for right now, I am expecting that to be a very, very relevant zone. So as of right now, again, it does look like Bitcoin's trying to put in a little bit of a bottom. We'll have to wait and see how it plays out. We really have to get above 10,150, above this area that we have marked off here, this box it's consolidating in, if this is in fact going to be a low. And if we do that, of course, we may find some resistance around that $10,400 area. But I wouldn't be surprised to see Bitcoin come back up to that $10,650 area again. Now, if we take out this prior high, and that's a big if, but if we take out this prior high here, I do think there's a good chance we come up and test about 11,500. I said that on the prior video. I still do think that's true. Even if we do that, guys, that's still going to keep us well within our area of consolidation. So no big deal at all. We still are just basically consolidating, waiting for that breakout. And as we approach closer and closer to the apex of this wedge here, and it is a wedge, as we approach closer to the apex, as I told you last time, within the next couple weeks, we are going to see a massive move either to the up or to the downside here. Now, if I come over here and look at the daily chart, we can see the 8, 21, and 55-day EMA are all converged very, very tight on top of each other. In fact, we haven't seen the 8, 21, and 55-day EMA this close to each other since we had this massive breakout on August the 2nd. Which basically ushered in this major move that we've seen here. That was the last time we saw the 8, 21, and 55-day EMA this close to each other. So again, this is signaling a much, much larger move to come. And if I come out here and look at the weekly, looking at the weekly, we can see the 8, 21, and 55 have basically started moving sideways, which once again does suggest that we are getting ready for a much, much larger move. Price has been consolidating long enough to get basically a flat line on the weekly major moving average or major exponential moving averages. And of course, that does indicate a much larger move is very, very likely to come here in the next, probably the next week or two, 3 at the most, but actually 2.5 at the most, but more than likely the next week or so, in my opinion. But we can see that we are still trying to find some support on the 8-week EMA. If this thing does drop, of course, the 21-week EMA is going to be a very, very key support. That sits at about 8,850 as of right now. Now, if we come back down to this area and test it, very likely what will happen, if in a bullish scenario, on a bullish breakdown, is price coming back down, testing this area, wicking below the 21-day EMA, probably closing that gap at 8,500, and then just basically bouncing right off that area. If we do end up breaking below the 21-week EMA and spend any time below there, if we get a weekly candle closing below the 21-week EMA, depending on what day it is, but let's just say if we get a weekly candle coming below the 21-week EMA and we spend any amount of time, more than a couple days down below there, I'm going to start to get very, very, very bearish. In my opinion, that'll be a very, very bearish sign of weakness, and then of course we can be looking for much, much lower prices. But it's not until we take out 6,500, this area right here, right around 6,500, again, between about 61 and 6,500. It's not until we take this area out that I do believe the overall uptrend here is going to be threatened, and of course I think it will start coming to much, much lower prices. I do expect, if price does come down this low, I would expect to find some support, if not a massive reversal, right around this area here. But again, if this area breaks, watch out below. If that area breaks, then all bets are off, and of course we could be coming down to much, much, much lower prices. But until that area does break, the overall uptrend would still technically be intact. And how do I know that? I know that because if I pull my swing low to swing high, even coming back down to that 6,500 area, really 7,000-ish, somewhere thereabouts, guys. That if we come down to about 7,000, that's going to bring us right inside the golden pocket. So we could literally come back down much further, down to about 7,000, and still not break below this golden pocket here. And typically, if this is a second wave, if you are an Elliott trader and you're a bullish Elliott trader, you're looking at this basically as we talked about before, as a wave 1, this coming back down for the 2. Wave 2 is typically correct to between the 50 and the 618 fib level. So that would be anywhere in here. This would be where we'd be looking for the wave 2. So that would be anywhere between about 8,600 and about 7,200-ish. Now, we could wick below there, no problem at all. But this would statistically be where wave 2 would find support. So, we can come down much lower here and still not threaten the overall uptrend that Bitcoin is in. It would just be considered, if you're an Elliott trader, basically a logical area for wave 2 to bounce. But as soon as we break down below that area, I start to get very, very, very concerned. All right, checking our indicators, daily RSI is still rejecting again right there at about that 53.9 area. I told you guys that would be resistance. That's exactly where, in fact, like literally almost to the tick, exactly where exactly where the daily RSI did find resistance. So we need to see the daily RSI breaking up about 52.9 for me to start to get bullish again at all. And of course, looking at the weekly, the area that I'm watching for support is going to be that exact same area, right around 53, 59, or 53 to 52.9. That same exact area. Why? Because as we said in the past, that was the major area of resistance when we were in a bear market. Resistance flipped to support all throughout the bull market, basically from October of 2015 all the way until we broke down in January of 2018. And then, of course, what happened during the bear market of 2018? That same area started acting as resistance. So on the weekly, we could drop all the way down here to that 53, 50, 59, 52.9, 53 area, and still the overall uptrend would still be intact. But if we do break down below that 52.9 area on the weekly, guys, I start to get very, 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 very concerned. But you can see we do still have a lot of area, a lot of room to drop here. And in fact, on the weekly here, if I kind of zoom in here, we can see that we are kind of painting a little bit of hidden bullish divergence just here with price creating a lower low. And then, of course, here where price created, even if I just look at the wicks, and it would work whether or not you're looking at the wicks or you're looking at the body. Technically, you should look at the body because the RSI is not going to take into account the wicks. But either way, we price created a higher low. So that's going to be obvious divergence in this overall uptrend here. That would be hidden bullish divergence, suggesting price coming up. Now, to be fair, we did end up having this massive wick right here, and then, of course, it came all the way up here to about 11,000 and then rejected. So you could say that divergence has played out. But you know, yeah, you could say it's played out. To be fair, it really I would have expected to go a little bit higher to be you know, to really play out. But we'll have to see. But the point is, even if this thing does end up breaking down, that's still technically, until we do take out about 9,000, would still technically be considered hidden bullish divergence, and you still could be looking for a nice little bounce off that area. So again, that would suggest even if price does come back down to that 9,400, maybe getting a little bit of a bounce off that area. But if we do end up breaking down, to be fair, if we do end up breaking down below, let me get to the 4-hour. If we do end up breaking down below 9,950 decisively on a daily, if we get, or excuse me, if we get a, there we get to the daily. If we get a daily candle closing below 9,950, or if we get a 4-hour open and close below 9,950, and I don't mean right on it, I mean nice and below 9,950, I will be looking for continuation down to 9,400. And as I said before, I do think there's a good chance if we come back down to 9,400, I do think there's a good chance that even if we bounce off it the first time, I do think that eventually it breaks to the downside. I do think that would, again, confirm the overall descending triangle, and then probability would be in favor of a break to the downside there. So even if 9,400 does temporarily hold, overall I would be looking for that break. But even if it does break again, I'd be looking for that potential bull trap between 89 and 8,500 that we discussed earlier. So anyway, guys, how am I going to play this in the short term just to wrap this thing up? Macro trend, we're looking for basically, again, just looking for a major break out of the overall macro structure, macro consolidation pattern that we're in. Micro trend here, I'm going to be watching this area very closely. If we get a 4-hour open and close above 10,150, I do think there's a good chance it wants to come up and test 10,650, but I'll probably, if I do take that swing, or scalp trade, I'll probably end up getting out somewhere around 10,400-ish, just knowing that this area could act as potential support, and I always want to get out early. I don't want to take any chances. To the downside, if we get a 4-hour open and close below, again, not like it was on here or on here, but actually below 9,950, I will be looking for continuation down to about 9,400, and it'll probably happen very, very, very quickly. We'll have to wait and see kind of how that ends up playing out. I will be looking for at least one bounce off of 9,400. On the second test, I do think 9,400 would break. So that's kind of how I would, how I'm playing the market as of right now, guys. No big trades at the moment until we break out a massive consolidation. And with that, I'm going to go ahead and wrap things there, guys. If you do have any comments, questions, suggestions, please let me know in the comment section below. As always, we appreciate an upvote. If you do enjoy this channel, guys, please remember to like, subscribe, hit that notification bell in the bottom right-hand corner. Until next time, guys, please trade safe. Take care of yourselves. This is Workin. Signing out.